Welcome back to Morning Trade Live. It's time to go inside out on insurance stocks. We heard from Progressive and Travelers reporting their earnings this morning. Cathy Seifert is with us, Senior Vice President, CFRA Research. Thank you so much for being with us. Much of what you expected, or what stood out to you in these reports?
So it's interesting. It's kind of a tale of two companies. Progressive is a growth story that remains intact. The numbers that they put up this morning reflect their ability to continue to drive top line growth, despite the fact that I think the insurance industry is starting to see a little more price competition.
I mean, let's talk about Travelers a little bit. Dive into Travelers a little bit. Higher today. There have been a lot of natural disasters, hurricanes, wildfires, more than I care. I mean, lives lost. It's devastating. These insurance stocks, there were a lot of concern about how they could fare.
Well, honestly, for Travelers in particular, the California wildfires were certainly an earnings event, but not a capital event. They still bought back shares, raised the dividend. So in terms of their financial strength, I'm comfortable with Travelers. The concern I have at Travelers is I think we're going to be seeing top line growth slow. As I was mentioning, last year, what we saw in this space was sort of a rising tide lifting all boats. I think this year, investors are going to have to be a little more selective in terms of the companies that are poised to outperform and those companies that, continue to produce decent underwriting results. Weather aside, I mean, catastrophe losses are likely to remain elevated. That also gives the industry pricing power. And I think that's an important element heading into a year that is likely to be faced with a lot of challenges, not the least of which are the inflationary pressures from tariffs.
I saw in your Progressive note, Progressive today up about 1%, the ticker symbol there, PGR. This one, you said the risk to your recommendation includes lower than expected rise in premium revenues and some other things. I mean, the chart's pretty good here.
Yeah, I mean, I still have a buy on Progressive. I thought these results were really strong. I think the one thing to look at, though, is that last year and maybe the year before, Progressive's growth came primarily from pricing growth as opposed to exposure growth, writing more policies, which basically increases their risk and their exposure to losses. The first quarter numbers were really solid despite all of the challenges we've talked about. But it's important to note that they're also growing out their policy base. So they're writing more policies to sustain this growth. I think investors are focusing on their ability to produce that kind of growth, and that will likely provide the shares with a catalyst.
All right. Thank you so much, because really Travelers and Progressive, Cathy, have held up while a lot of the market has been hit hard. I mean, these charts are looking pretty good. Cathy Seifert, it's great to chat with you.
Hey.
CFRA's Cathy Seifert, thank you for that. Now let's go and take a look at the charts and have example trades for you. Tom White, host of Fast Market, here looking at some example trades. Hey, Tom White, good morning to you. I think you're trading Travelers first, which is up over 2.75% this morning.
Yeah, good morning, Nicole. Yeah, even with the catastrophe losses of over $2.2 billion, and then that's up from $700 million from a year earlier. So, yeah, strong move here. Not quite to all-time highs. It's filled a gap that we saw from a few weeks ago. So I looked at this strategy as, outlay some capital. Implied volatility levels are down because earnings are past, right? So the event risk is gone. So that lowers maybe what you're paying for directional type strategies. So I looked at something, if you think the stock's going to continue to move higher, maybe the macro environment improves where They continue to move higher. This type of strategy takes advantage of it at a lower cost entry point because implied volatility levels are down. Looked at a bullish call vertical here, just going out to the May monthly cycle. So 30 days to expiration on this one. We're going to buy the in-the-money 250 strike call. It's got the higher delta. It's going to react more like the stock. And then against it to offset some of the costs on that bullish call, we'll sell the 270 strike call. So a $20 wide bullish call vertical. You're paying roughly, I've got $8.50 debit on it. Might be $9.50 right now. It has continued to move higher. But if you pay an $8.50 debit, that's going to be your risk on it, $850 per spread with that break even of $258.50 over the next month. So that's about 1% above the current share price. So you don't need a big move in the stock to get above that break even. And by buying a strategy like this post earnings, if the stock does continue to move higher, you've got 30 days where you can manage it, close it early if the market's open, due to the fact that it's a directionally biased type of trade. So you don't have to wait until expiration. When you look at this, with less than a 1% move to the upside to get above that break even, you got a pretty good probability of success on this one. You sell that 270 call against it just to offset some costs with the thought maybe over the next 30 days, maybe it's not going to go much above 270 if at all, but you're risking about $850 to make $1150 on this type of strategy where, hey, if it goes to 270, that's only about a 2% move to the upside.
All right, thank you for that. And as you noted, it's climbing higher even while you're speaking this morning. You had to adjust what you were saying. I mean, it's looking pretty good. Both of those names, Progressive and Travelers, were impressive. And you heard Cathy talking about a buy rating on Progressive. Then we turn your attention, Tom, please, over to Berkshire Hathaway. Yep. You have an example trade here. That too dipped and has made its way back. It's filling back up. And when we look at what happens here, I mean, there's been a lot of news. I found it interesting that they're pricing yen-denominated bonds worth over $600 million. The net jets may have had a breach, but the big picture is Berkshire Hathaway is a star, and it has been. Some of your thoughts on an example trade? Yeah,
it's just a consistent mover to the upside, and maybe you can attribute that to Warren Buffett and the way that he manages his businesses here. But if you look at it, the stock's up about 16% so far this year. Flat on the month, but up over 30% from year-ago levels. So it's had a great run. You see there from the chart. They've got earnings on the weekend after May 2nd expiration. So they always report on the weekends. So I kind of want to avoid that event. So I looked at a strategy that takes advantage of, hey, some consolidation here, or maybe it goes higher, right? I looked at selling an out-of-the-money put vertical here in Berkshire Hathaway, the B shares. Got to remember that. In the May 2nd weekly options that expire in 16 days, sell the 525 put and then buy against that because we want to stay risk-defined in this type of market environment. Buy the 515 strike put. So a short, neutral to bullish, $10 wide put vertical. You're collecting roughly about a $3 credit. That's what you can make on this trade with about $700 in risk. And it takes your break even down to 522 to the downside. So you're giving yourself that cushion. It's conservative, where you're trying to hit a single or a double in that baseball analogy, not trying to swing for the fences. But with the expectations that the stock kind of stays here, maybe grinds a little bit higher into that earnings. But I think the key with this type of strategy is that you're avoiding the earnings event on the weekend of the 3rd and 4th. So, maybe a neutral to bullish put vertical may work out here if you think the stock's going to stay firm or move higher. All right, Tom White, great to see you. Thank you for taking a look at both Travelers and Berkshire Hathaway with some example trades. Thanks. Appreciate it, Tom.